Suppose receipts and payments count for 31st December 2010 is given. On debit side, to balance BD 5,000, to subscription 5,000 and total 10,000 rupees. And on credit side, by wages 2,000 rupees and by balance CD 8,000 rupees, total 10,000 rupees. And additional information or adjustments are outstanding wages as on 1st January 2010 300 rupees and outstanding wages on 31st December 2010 700 rupees. Outstanding subscription on 1st January 2010 800 rupees. Outstanding subscription as on 31st December 2010 600 rupees. Furniture as on 1st January 2010 was 5,000 rupees. So in this question, adjustments in the beginning, I mean to say 1st January 2010 and at the end, both are given. When you were studying final accounts in your previous class, all the adjustments were at the end. But in this question, adjustments are in the beginning also. So let's see how to handle all these things. Prepare the format of income and expenditure account and 2 balance sheets and 1 capital account. So first of all, we'll read the adjustments. Outstanding wages on 1st January 2010 300 rupees. You know, outstanding wages on 1st January 2010 means in the beginning. Outstanding wages at the end are added in the income and expenditure account, but in the beginning it will be deducted. So on the debit side of income and expenditure account, 2 wages minus outstanding in the beginning 300 rupees. And in the same way, outstanding wages are always shown on the liability side. So on the liability side of the balance sheet, outstanding wages in the beginning 300 rupees. Now outstanding wages at the end, I mean to say 31st December 2010 700 rupees. Outstanding wages at the end are always added in the income and expenditure account in the inner column. So plus outstanding at the end 700 rupees. And in the same way, the same amount 700 rupees will be shown on the liability side at the end. Now let's move to outstanding subscription. Outstanding subscription in the beginning, that was 800 rupees. You know, outstanding at the end is always added, but outstanding in the beginning is deducted in the inner column. So at the credit side, by subscription minus outstanding in the beginning 800 rupees and plus outstanding at the end, that is 600 rupees. And in the same way, you know, outstanding expenses are shown on the liability side, but outstanding incomes are shown on the asset side. So on asset side, outstanding subscription in the beginning 800 rupees and at the end 600 rupees. Furniture as on 1st January 2010 5,000 rupees. Furniture is an asset and it will be shown in the balance sheet. Furniture in the beginning 5,000 rupees. Now we'll move to receipts and payments account debit side. To balance BD, this is the opening balance, means opening cash balance is 5,000. It will be taken to the balance sheet. Cash balance 5,000 in the beginning. To subscription 5,000 rupees. This is the income, and incomes are always shown on the credit side of income and expenditure account. So by subscription 5,000 rupees, and the net figure will be 5,000 minus 800 plus 600, that will be 4,800 rupees. Credit side, by wages 2,000. This is expenditure and all expenses are shown on the debit side of income and expenditure account. So to wages 2,000 in the inner column. So 2,000 minus 300 plus 700, in the outer column we'll write down 2,400 rupees. On receipts and payments, by balance CD 8,000 means closing balance is 8,000. It will be taken to the balance sheet. Cash at the end 8,000 rupees. So let's finish income and expenditure account first. On credit side, the total is 4,800 rupees and the same figure should be on the debit side. I mean to say 4,800 rupees. So to surplus, this is the balancing figure. I mean to say this is the gap, 2,400. So this club or organization has earned 2,400 rupees. Now prepare capital account. On credit side, buy balance PD. On debit side, to balance CD. And on credit side, buy surplus. In the beginning on asset side, the total was 10,800 rupees. And the same total should be on the liability side. But on liability side, the item is only 300 rupees. It means there is balancing figure of 10,500 rupees. It means this is the capital in the beginning. So by balance BD in the capital account 10,500 rupees. By surplus 2,400 rupees. Total 12,900 rupees. On debit side, to balance CD should be 12,900 rupees. And this figure will be taken to the balance sheet, 12,900 rupees. Now let's make totals. The total is 13,600, 13,600. It means both sides agree. It means the question is okay. You know, in receipts and payments count, receipts as well as payments are recorded. On debit side, we write down opening balance and all receipts, and on credit side, closing balance and all payments. All these payments fall in two categories: capital payments and revenue payments. Capital payments are those payments which don't affect our income. I mean to say, these payments are never taken to the income and expenditure account. For example, if you buy furniture and you pay cash for that, that payment will be shown on the credit side. But when you buy the furniture, your income is not affected by that. It will affect your balance sheet. I mean to say your assets will be increased. In the same way, other payments are revenue payments. Revenue payments are those payments basically which are paid for the expenses, and they are always shown on the debit side of the income and expenditure account. For example, the payment for wages, salary, advertisement, etc., etc. In the same way, on the receipt side, these receipts are of two types: capital receipt and revenue receipt. Capital receipts means they won't affect our income. For example, sale of an asset, etc. And revenue receipts are those receipts which helps us in increasing our income. For example, subscription receipt. So in this way, all payments are of two types: capital payments and revenue payments. In the same way, all receipts are of two types: capital receipts and revenue receipts. Revenue receipts and payments, they are taken to the income and expenditure account, and capital receipts and capital payments, they affect our assets and liabilities.